Hello, and welcome to the Year Trader and our third episode, where we aim to take your paychecks and turn it into a growing portfolio. I am Steve, your host, and I'm just a regular guy who's having some fun trying to outperform the market. I'm taking $200 out of each of my paychecks. I get paid every other week, and purchasing stocks based upon the analysis that I provide in this show. I create a new podcast once per month where I count for prior picks, provide some analysis on the upcoming month's picks, and I do put my purchases in a spreadsheet to track results that you can all see. Check the link at the bottom of the video there, and it's tinyurl.com/the-year-trader. I should warn you, I am not an investment professional. I am simply sharing my journey. And should you want to use any of this analysis or stock picks for any investment of any kind, that is on you. Talk to your investment professional and make sure that the risk that I am taking is appropriate for you. My general goal each month is to identify some stocks that have at least 100% projected return over the next 12 months. I'm picking risky stocks. I am a year trader. I'm not a day trader. In some cases, I may not find stocks with that amount of predicted upside approval, and that's okay. I will also have a theme each month, meaning I'll investigate a particular market sector. I should let you know that when I check for the 100% projected return, it's based on analysts and what they're saying and what their projection and research is. I gather all of my information from Yahoo Finance, just so everyone knows where I'm getting my information from. And I generally try to make sure there's at least 3 analysts, and I average their picks to see if it's going to be 100% projected. Sometimes it's hard to find a bunch of analysts that are in a particular sector that are picking a stock to grow 100%. And there's some other ways to look at potential. There's this doubler metric. You can search it, and so I'm using that metric too as well. I look at fundamentals and I go from there. And in particular this month, I've got a couple of stocks where the analysts are only saying 35, 40, 50%, whatever. We'll get to that upside in a year. But the doubler metric is very strong and their financials are good. So I'm kind of going with those, but we'll get into that in the rest of the podcast. This month's theme is energy. I looked at the energy sector. So if you go out to my spreadsheet right here, look at the link below. If you can see this right here. I can't see, it's hard. Anyway, right there, tinyurl.com, the-year-trader. There is a tab in that spreadsheet, and it shows all the stocks that I looked at. Anyway, I break my podcast into 3 segments. One is accountability, where I go over all my prior picks and comment on the overall portfolio performance. This podcast is about results. It's not about intentions. And so we measure ourselves with results. Doing pretty good out of the gate. That's all I'm going to say. We'll get to that in a second. Analysis. This is where I dive into specific stocks that have high potential and are also a part of this month's theme. And then the third section is where I actually make picks. So on to segment 1, accountability. I need to put up a graphic here, so let me provide that. Here's a graphic on my performance. You can see that the stocks that I purchased in December, again, I get paid twice a month. A couple $100 a month is approximately $400 a month. There'll be a month there, I think it's coming up in, is it March? Is it next month? Anyway, every now and then there's a month where I have 3 paychecks. But anyway, the stock picks that I picked in December are now worth $509, which is an upside of 27.4%. And the stocks that I picked in January are at 486, so that's 21.7%. So my average return right now on the portfolio is 24.6%, and that is fantabulous. Now, why is my goal return only 4%? Well, each month I'll be picking stocks. And each month, those stocks that I picked in that particular month need to grow by 8% per month on average. And at the end of 12 months, that's 96% or roughly 100%. So you can see that the stocks that I picked in December had the month of January to grow 8%. And the stocks that I picked in January really didn't have any time to grow. So the average return right now that I could hope for across all those picks is 4%. And if I was at 4%, I'd be on track. But I'm at 24.6%, so this is fantabulous. Anyway, next month you will see that the December stocks goal return rises by another 8% to 16%. The January stocks will follow, and they will go from 0 to 8%. And then the picks that I make in for February, will be at 0%. And I'll just keep doing that. And that's how I'll track performance here. So again, 24.6% out of the gate. And at the same time, the S&P 500 has only grown 1.5%. That 12/15 date that I'm comparing myself to on the growth rate is because my very first stock pick that's in the spreadsheet at tinyurl.com/the-year-trader occurred on the 15th of December. Anyway, that all makes sense, hopefully. Let's move on and get to the next part of the show. We talked about accountability. Okay, segment 2, analysis. As I stated, this month's theme is energy. Now, there isn't a list of all the energy companies, but I compiled a list of 62 of them in the energy market. I did this just through generic, web searches and whatnot. And so, again, if you want to see that list, I published the ones in my spreadsheet. Just see the tab entitled E3 for episode 3, energy. Anyway, I will summarize the top 4 upside potentials on that list. At the top of that list is one of our prior picks, New Scale Corporation, ticker symbol SMR. It currently has a 74% upside prediction, and now 13 analysts that's the average across 13 analysts. So that made the list again. We've already purchased New Scale. I did an AI market search, and they showed up in that too because they're powering AI infrastructure. And so it kind of showed up twice, but that's okay. They're still a good pick, and we're going to talk about them a little bit more in this podcast. Next on the list is SM Energy, ticker SM, with 73% upside predicted by 12 analysts. And so, again, as I mentioned before, I have this doubler metric. Here's one called Matador Resource Company, ticker MTDR. Now, the analysts are projecting a 35% upside, but the doubler metric is very strong, and so we'll take a look at Matador. And lastly, we'll look at EOG Resources Incorporated. The analysts only see a 27% upside, but my other metrics say otherwise, so we'll take a look at that company as well. I should tell you that the upside numbers I just gave you will probably be different on the slides. Now that I realize this, I wrote this script about a week ago, and those numbers reflect that. But in the slides that I'm going to present about these companies, I updated them as of today. And I should tell you that I'm doing this podcast a little early. It's Saturday, January 24th. I would do it next weekend, but next weekend is my annual boys trip where me and some lifelong friends get together once a year, and we're going to play some craps. What can I say? Anyway, I'll move on. Okay, so now let's get to the number 1 there, New Scale Power. Let me put up a graphic on New Scale Power. There we go. New Scale Power Corporation, which trades under the ticker SMR, develops small modular nuclear reactors, SMRs, designed to generate carbon-free electricity. The company's technology centers on the New Scale Power module, which is a compact factory-built reactor that you can link several of these together to meet different power needs. NuScale aims to provide safer, more flexible, and more cost-effective nuclear energy solutions. And remember, they are factory-built for utilities and industrial customers worldwide. NuScale was the very first company to receive the U.S. Nuclear Regulatory Commission, the NRC, certification for a small modular reactor design. And so this NRC, so that was for their first design. I don't know if it was the first design. They got one approved for a 50 megawatt, I think it's megawatt, module in 2023. And more recently, they received approval for its uprated 77 megawatt. It's MWE. I'm not sure what it stands for, but anyway. As of these announcements, NuScale remained the only SMR technology company with an NRC-approved SMR designs. NuScale's modular reactors are not yet operating in any commercial site, but they are committed for deployment through a major U.S. program, and that is the Tennessee Valley Authority, and so Energy. So they are going to take some of these reactors. And also, Intra One Energy has launched a plan to deploy 6 gigawatts of NuScale SMR capacity. So that's who's going to do it. Intra One's going to do it across the Tennessee Valley Authority 7-state service region, representing the largest SMR deployment initiative in U.S. history. This means NuScale reactors are in the deployment phase, with site selection and development underway. Now, no reactors are currently producing power right now, but they're working on it. So anyway, dates for the first online reactor is being worked with the Tennessee Valley Authority. And also, you should know, NuScale scores reasonably well on its fundamentals because it carries very little debt and maintains a strong cash position and operates with a capital light, licensing-based business model rather than heavy manufacturing. Even though this isn't yet generating commercial revenues, its balance sheet strength and disciplined cost structure keeps its quality metrics from looking distressed. As you know, NuScale came up in my prior list of AI companies that I looked at, and I like them. And I also like their doubler metric. The doubler metric tells you how long it would take for a stock to double if price of its recent momentum keeps going at the same pace. It's calculated by taking the natural log of 2 and dividing it by the stock's annualized momentum return, which converts a percentage trend into a simple time estimate. Anyway, it works because strong momentum mathematically compounds faster, so stocks with higher sustained returns naturally produce a shorter time to double, making it an intuitive way to compare trend strength across very different companies. Anyway, NuScale is looking good in my opinion. Let me move on to a different company. We are now going to move to SM Energy. SM Energy graphic is right here, is an independent oil and gas exploration and production company focused primarily on shale development in the Permian Basin. Its business centers on acquiring, developing, and producing crude oil, natural gas, and natural gas liquids, with a portfolio that has become increasingly efficient and high margin over the past several years. Its doubler score is decent because the stock has shown steady positive momentum driven by strong commodity pricing and disciplined capital spending, which translates into a relatively short time to double under current trend assumptions. Energy names often exhibit durable momentum when cash flows are strong, and SM has been riding that pattern. Its fundamental score is solid because the company maintains strong free cash flow, manageable debt, and consistent profitability, all of which lift its quality metrics. The combination of efficient operations and a healthier balance sheet compared to many peers keeps it out of the high-risk bucket. You should know that SM is highly leveraged to crude pricing, so a drop in oil prices would compress cash flow, margins, and drilling returns. Let me move on to the next company, which is Matador Resources Company. Let me bring up their graphic. There we go. Matador Resources, ticker MTDR, is an independent oil and gas exploration and production company focused primarily on the Wolfcamp and Bone Spring plays in the Delaware Basin across southeast New Mexico and West Texas. Sounds like one of those companies in Landman. If you've watched that show, that show's fantastic, by the way. If you get time, you should watch it. Anyway, Matador Resources operates in the Haynesville Shale and Cotton Valley plays and runs a midstream segment that provides gathering, processing, and water handling services to support its drilling operations. Matador's doubling potential benefits from steady positive momentum driven by strong production growth, efficient well performance, and supportive commodity prices. Energy names with consistent cash generation often maintain durable momentum trends which shorten the implied time to double. Matador posts solid profitability, strong cash flow, and disciplined capital allocation, all supported by high-quality acreage in the Delaware Basin. Its balance sheet is healthier than many of its peers, and its midstream operations add stability, helping it land in the high end of projected doubling in price this year. If prices drop, Matador has top-tier Delaware Basin acreage, which tends to remain profitable deeper into price declines than many peers. So that's a positive for Matador. So let's take that graphic down, and we will move on to the next company, which is EOG Resources. EOG Resources is one of the largest and most efficient independent oil and gas producers in the United States, with core operations in the Permian Basin, Eagle Ford, and Powder River basins. The company is known for its low-cost drilling, strong operational discipline, and industry-leading well productivity, which consistently place it among the top-tier shale operators. Well, let me I forgot a graphic up here. It's this graphic right here. There's EOG. EOG's doubler score benefits from steady, resilient momentum supported by reliable production growth, strong capital returns, and a reputation for outperforming peers during both high and mid-price oil environments. Its trend strength tends to be more stable than smaller some smaller companies, which keeps the implied time to double in a reasonable range. EOG posts excellent profitability, very low break-even costs, and one of the strongest balance sheets in the sector, all of which push it towards the upper end of the fundamentals calculation. It has consistent free cash flow, disciplined spending, and a long track record of operational excellence, which makes its fundamentals more durable than most shale producers. EOG is one of the lowest cost producers in North America, so it stays profitable deeper into a price decline than most peers. Even so, lower crude prices would reduce cash flow, drilling returns, and capital return capacity, which could cool investor sentiment and soften the stock's momentum trend. So that is EOG. Let me take that graphic down there. And so now it's time to move on to segment 3, where we pick some of those stocks. And I tell you how much of my $200 for the paycheck here. I'm calling it my February picks, but it's really late January and then mid February. So those will be my February quote unquote picks. But on to the picks. I have to admit, I like the new scale approach. I think is really cool. And I think it's got legs. And so I have a bias towards this stock, and I want to buy some more. It won't see online reactors for some years, but its business model generates revenues through the construction process, and it may not even break ground until next 2027 or 2028. You need to know all this, but all indicators are growth in stock price this year. So I'm going to put 50% of my money this month on NewScale. Ticker SMR. As a side note, their ticker symbol doesn't align with their company name well, but it does align with what they do, as SMR stands for Small Modular Reactor. Let me put up I have a graphic for this, so let's put that up. So there, 50% NewScale. Of the three oil companies that I looked over, or we talked about earlier, SM Energy is most tied to crude prices or its ability to weather price drops. So I'm going to skip over SM. I'm not saying it's a bad company. I'm not saying it's a bad pick. It just seemed, oil's going to go up and down. Oil may even be a little bit risky right now, but I'm trying to diversify over several market sectors. So I want to, pick some companies, but this one, relative to the other two, is a little more sensitive to crude price drops. So I was going to avoid that one. And that leaves 25% of my money to go into Matador Resources Company, ticker MTDR, and 25% of the money then going into EOG Resources, ticker EOG. Lastly, I've added on here, I'm going to watch Recor Systems. Bought that in a prior podcast, ticker REKR. It's done nothing for me. It's not helping at all. In fact, it's gone down a little, and it just seems like there's no momentum. And so I'm going to give them a little more time. We got to be patient. We're year traders here, but we're not going to hang on to a loser, So we could reinvest that into something else. So I'm going to watch that, and I will comment on that and dig into them a bit on the next podcast. We'll see how patient I end up being with Recor. If you do have a little extra cash, at the moment, Irene Limited and NewScale is carrying the entire portfolio. Remember that 24% upside? Well, Irene and NewScale are both up about 40%. You can see that on the spreadsheet. So, in theory, there's still 60% or so upside on those two, and you might want to put a little in there because they're doing well. So, anyway, that's what's going on with the show for this episode. And like last time and all times, we will ask for a little help from above. If you haven't listened to me before, I'm a strong believer in God and Jesus Christ, and so it doesn't hurt to put out a little prayer and ask for a little blessing on these investments. Yes, you can do that, and it's not against the rules or anything like that. God created investments. He wants us to have a joyous life. Investing into one's future is a part of providing that joyous life, and so it's just a part of the whole big universe, and so it's a good thing. So anyway, let's pray. Dear Lord, I ask you through your Son Jesus. Sorry about that. Dear Lord, I ask you through your Son Jesus to please lead each of us to a life of joy that aligns with your plan. I am grateful for all in my life, and I try to take stock, if you will, in the little things each and every day. I ask your blessings on my life, the lives of any podcast listeners and their families and friends, and I ask you to bless my investment choices as I will endeavor to do good with any returns. In your Son's name, who died for our sins and is the only path to everlasting life. Amen. All right, guys. We will see you next month on The Year Trader. You can look me up on YouTube at @ The Year Trader. You can email me at theyeartrader@gmail.com. Again, my name is Steve, and I look forward to talking to you next month. All right. Bye-bye.